Good evening, guys. Good evening to every one of you. How are you guys? So today, students, we are starting a new chapter. That is chapter 3, audit documentation and audit evidence. Students, this chapter contains some basic fundamental concepts which would be there in every subsequent chapter. So therefore, it is important for you that you understand all the topics within this chapter carefully. And it is a fairly long chapter, and I think it is one of the longest chapters in both the modules. So we have got sufficient time. We have been allotted 6 lectures for this chapter. So students, in this chapter, we shall be learning mainly about audit evidence, audit procedures, and essays associated with these. So today we will be first doing the portion on audit evidence. The portion on audit evidence. We shall be first doing this portion because it is fairly large enough and very important also, and it may cover 2-3 lectures. Okay, students, so you understand that auditing is a logical process. The ultimate objective of auditor is to obtain a reasonable assurance, which you by now have understood that it is a high level of assurance, that financial statements are free from material misstatements due to frauds or errors. And ultimately, he has to give his opinion on the financial statements, on the state of affairs, on the profit or loss of the concern. So how does auditor arrive at his opinion? So how does auditor arrive at his opinion? So broadly, students, as we have learned, that he understands accounting system and controls. First thing is this, broad steps. Then he assesses risk of material misstatement, where things can go wrong, which are the areas more prone to frauds and errors. And then come audit procedures, how he collects audit evidence. So audit procedures are meant to obtain audit evidence. You understand? And this audit evidence, students, this is used by the auditor in making conclusions. In making what? In making conclusions, whether to rely upon the information given in financial statements or not. So you understand that audit evidence becomes very important. It is the core. It is the core on the basis of which opinion of auditor is made. Fair enough, guys? Because unless the auditor has audit evidence in his possession, how he can say objectively that financial statements represented true and fair view of the concern? Therefore, he has to obtain audit evidence to express his opinion. And how audit evidence is obtained? Audit evidence is obtained by applying different audit procedures. Okay, so you understand the meaning of these terms, audit procedures and audit evidence. And why audit evidence is so important? Because unless the auditor obtains necessary audit evidence, then he would not be in a position to give an opinion on the financial statements. He has to critically analyze the financial statements. He has to ensure that audit has been conducted in accordance with standards on auditing, in accordance with essays. Therefore, audit evidence becomes very, very important, and its study also becomes very, very important. Is that clear to you guys? So now, students, first of all, we shall be learning things in a general way, and then we shall be going to your module. So first of all, before we go to the detailed discussion on audit evidence, students, you would be remembering that we had learned a term assertions in chapter 1. Do you remember? Assertions in chapter 1. Do you remember, guys, what was the meaning of assertions? Anybody, can you tell what was the meaning of assertions as we had studied in chapter 1? So assertions are what? These are representations by management which are embodied in financial statements. These may be explicit or otherwise. It means these might be implied, implicit. Okay. So these are representations by management embodied in financial statements which are used by auditor to identify, to consider different types of potential misstatements, the kind of misstatements that can occur. So guys, you understand the definition of assertions? Guys, those of you who want to refer to module, we are at page number 3.29 of module. So today, guys, I had already told you that we shall be at the time of discussing chapter 1, I had told you that we shall be learning more about assertions in chapter 3. So today, first we shall be learning about assertions, and then we shall know how the auditor obtains audit evidence to verify the assertions made by the management in the financial statements. Okay, guys. So guys, listen very, very carefully and patiently, because all these terms, assertions, audit procedures, different kind of procedures, what are the different kinds of audit procedures, and audit evidence, these form core of your syllabus, and this chapter is very, very important. It runs into, I think, 80-90 pages. So this chapter includes many essays also, and all the concepts are very fundamental to the understanding of auditing as a subject. These are discussed in this very chapter, in the chapter pertaining to audit documentation and audit evidence. Is that clear, students? So assertions, we understand, assertions are representations by management embodied in financial statements which are used by auditors. Guys, again I am repeating it. You have to clearly remember that assertions are made by management. These are not made by auditor. These are used by auditor. The auditor uses them to identify what are the potential misstatements in the financial statements. Okay. So first we will see what are the assertions, and with the help of some examples, so that it is more clear to you. So let us say, guys, that balance sheet of a company shows under the head property, plant and equipment. It shows say in the schedule of property, plant and equipment, it shows original cost of machinery, say rupees 10 lakh. Okay. And it also shows depreciation till the end of previous year, already charged, not belonging to this year, say rupees 4 lakhs, and depreciation for current year, say rupees 1 lakh. And then it also gives the WDV, that is rupees 5 lakhs. So this is a assertion made by management in the balance sheet of the company, in the balance sheet of financial statements. Now what could be what assertions we can draw from it? What assertions we can draw from this information? What we can say, what the management wants to say from this information. Now we can say that management is making assertion that historical cost of machinery is 10 lakhs. This is the one assertion the management is making. Assert means to say something. I am asserting something. When the machinery cost is reflecting in the financial statements, it means that historical cost of the machinery is rupees 10 lakh, meaning that the machinery was purchased at a cost of rupees 10 lakh in some past periods. That's clear. So that is an assertion. And another assertion is that another implied assertion is that that machinery is used for the purpose of business of the company. That is why depreciation is charged. Okay. And depreciation is rupees 1 lakh for the current year and rupees 4 lakh for past periods. For another assertion we can make that machinery is owned by the company. Although it is not expressly stated, is owned by the company. Because the value of machinery is coming in the balance sheet, is being reflected in the balance sheet. Therefore, it implies that machinery definitely pertains to company. That company has a right in that machinery. Similarly, we can also make few assertions in respect of all the items which are there in the financial statements. All the items which are there in financial statements. Say if there are purchases of 5 crores in the profit and loss account, then we say that the company has in fact made purchases of 50 lakhs, and corresponding to that purchases, stock of the company must have increased by 50 lakhs. Okay, and accounts payable, balance of creditors must have increased by 50 lakhs on account of these purchases. So guys, so every item which is there in the financial statements is some sort of assertion, is some sort of representation made by the management. Okay, so guys, are you clear? It is a fairly simple concept. It is a fairly simple concept, but you have to understand it from the point of view of auditing, in the language of auditing. आपको इसको ऑडिटिंग की भाषा में समझना है. सिंपल कंसेप्ट है, लेकिन इसको आपको टेक्निकल ऑडिटिंग की भाषा में समझना है. इसको ऑडिटिंग की लैंग्वेज में अंडरस्टैंड करना है. इज दैट क्लियर टू यू गाइस? Say we take another example. Say if there is cash in hand in the balance sheet of an organization, say cash in hand of rupees 1 lakh. Okay, so what assertions we can make from this? So what inference we can make from this assertion? When the management is showing cash in hand in the balance sheet as on certain date, say as on 31st March 2022, rupees 1 lakh. So what does it mean? It means that physically cash in hand of 1 lakh was there. On 31st March 2022. So is that clear? And second assertion we can make, second assertion could be that that cash was available for use by business of the company. Okay, and we can also say that books of accounts also show that books of accounts of the organization also show cash of rupees 1 lakh, and which is reconciled, which is tallied with physical cash. So these are the sort of assertions we can make. So you understand, assertion is not some kind of out of the world thing. It is not something which has come from outside, but it is there in the financial statements. Every figure in the financial statement is some sort of assertion. Okay, so definitely, logically, you think that financial statements are prepared by the management. These are the responsibility of the management. Therefore, assertions are also representations by the management. So how your definition is reconciling with the concept which I am trying to explain to you? So is that clear to you guys? So assertions are definitely representations by the management, because financial statements are prepared by the management. and auditor uses these assertions to verify potential, to consider potential misstatements. So the, like in this case, say we will first take example of machinery. Say in the example of machinery, it is stated in the balance sheet that historical cost of machinery is 10 lakhs and depreciation for past periods is 4 lakhs, and current period is for which balance sheet is made is 1 lakh, and total cumulative is 5 lakhs, and WDV is also 5 lakh. Okay, so this shows the auditor would say that balance sheet, that in your balance sheet machinery of rupees 10 lakh is coming, that show me that this machinery is existing. He would verify it in this way. He would say, show me where is that machinery which is existing, which is being reflected in your balance sheet, having a historical cost of 10 lakh and WDV of 5 lakh. Show me the existence of that machinery. He would also want to see the purchase bills. Okay, say if some addition has occurred during the year, he would like to verify it from the purchase bills of machinery, the cost of acquisition of machinery. Okay, if the bills are in the name of the company, then what is proved, guys? Ownership. That ownership of machinery is also proved. So this proves that machinery belongs to the company and it has been reflected, its cost has been reflected correctly, and the machinery in fact existed. So all these three assertions, which are explicit or implicit, which are made by the management, are proved or disapproved by the auditor. So that is the use of assertions for the auditor. Now Pooja is asking how it is possible to verify the cash physically and with books of accounts. Pooja, it is very possible. The physical cash tallies with the cash book, and the auditor can check it on the closing day if he wants to physically verify the cash. Okay. So guys, are you clear about what we mean by assertions? Is that clear? Yes, students, tell me, is that clear, so that we can move further? Now Hindavi is asking, sir, can auditor can rely on assertions made by the management? Hindavi, the point is the auditor has to verify those assertions. The assertions are there in the company saying machinery of 10 lakh, and I will ask the company to show me where is the machinery. Okay, is that clear to you? So I would be verifying the bills of the machinery. I would be physically verifying the existence of machinery. So I would be obtaining evidence about the existence of machinery, about the ownership of the machinery. Okay, about the fact that machinery is being used for the purpose of business of the company. Is that clear? सो बेसिकली आपको ये समझना है कि एसर्शन हर एक आइटम फाइनेंशियल स्टेटमेंट्स में मैनेजमेंट के द्वारा दी गई कोई ना कोई एसर्शन है। अब उस एसर्शन को ऑडिटर ने चेक करना है। वो कैसे चेक करता है? बाय डिप्लॉइंग ऑडिट प्रोसीजर्स, वो ऑडिट एविडेंस कलेक्ट करता है। से अब इस केस में क्या ऑडिट एविडेंस है? द ऑडिट एविडेंस इज बिल्स ऑफ मशीनरी। द ऑडिट एविडेंस इज दैट ऑडिटर हैज physically inspected the machinery. So by inspection, by employing a procedure of inspection, the auditor has collected evidence. Now Rekha, assertion is there for each and every item of balance sheet and for all disclosures, not only for items but for all disclosures which are there in the financial statements. Now Simran is asking elaboration of financial statement is assertion. Simran, you can understand it from that point of view. Basically, whatever is there in the financial statements, it is some sort of statement being made by the management. Now the auditor has to verify those statements, those assertions, by obtaining audit evidence. And how he would obtain audit evidence? He would be obtaining audit evidence by employing different kinds of audit procedures. Is that clear? Is that clear to you, students? What do we mean by assertions? And guys, please let me know, is the point clear to you? And we have already read in chapter 1 what do we mean by express assertions, explicit assertions, and what is meant by implied assertions. Explicit assertion, like we have seen in the example of cash in hand. Say if the company is saying that as on 31st March there was a cash in hand of rupees 1 lakh. Okay, so that is an explicit assertion that company had cash of rupees 1 lakh. Now what is the implicit assertion? Implicit assertion is that cash was available for use by the company. Okay, and say we take another example of express assertions and implied assertions. Say if the if there is, if in the case in the balance sheet of an organization or a company, of an entity, say building is not appearing, there is no building is not appearing, so there is no building. Okay, so what is the implied assertion? Implied assertion is that the company didn't have a building, it might be working from a rented premises, because the value of building is not coming in the financial statements. So it is a implied assertion, implied negative assertion. It is implied and also negative. Negative, why? Because there is nothing stated in the balance sheet, but we are making an assertion that since building is not coming, it means the company is working from a rented premises. So the company doesn't own a building. Okay, so similarly we can say that if there is no machinery in the balance sheet of a company, if there is no machinery in the balance sheet of a company, say if there is no machinery in the balance sheet of a company, then what implied assertion we can make? Tell me guys, what implied assertion we can make? What is the implied assertions? If there is no machinery appearing in the balance sheet of the company, in the financial statements of a company, then what implied assertion we can make? Yes, guys, waiting for your mails. If there is no machinery appearing in the balance sheet of the company, then what does this mean? What implied assertion is there? Yes, anybody? Now Rekha is asking if say value of something is some asset is zero, how we will check? Rekha, you have not to check it. It is just assertions are for the sake of understanding. It is a theoretical framework for the sake of understanding. Say if the furniture fixture, no furniture fixture is coming in the balance sheet of company of the organization of the entity, then it means the entity didn't have any furniture or fixture. Yes. If the machinery is, if there is no machinery, I had asked if there is no machinery in the balance sheet of the company, then what is the implied assertion? Now many of you are writing that machinery is taken on rent. Yes, that can be the case. If the machinery is taken on rent, it is on lease. Okay, then its value will not be appearing under the machinery. So it could be the case. What another assertion we implied assertion we can make? Put a little bit stress on your mind. What another implied assertion we can make? Say if there is no machinery coming in the financial statements of company, then we can say that company is not a manufacturing company. It is not engaged in manufacturing activities. It might be so. If it has not taken a machinery on rent, then it might not be engaged in manufacturing activities. It could be only a trading concern. It could only be a trading company or say service company which is providing services. Yes. Now Kusum Lata is saying yes, she is writing it correctly that there is no work related to machinery. Your point is valid. I have understood what you want to say. And Akash Neil has written correctly. Yes, the company may be into the trading business. So these are all machinery may be sold. Yes, it can be there. It can be there. No manufacturing. So guys, you now understand what is the meaning of implied assertion. So when we see the balance sheet, when we study the balance sheet, so we get to know about the different items, about the different elements which are forming that balance sheet, which are forming those financial statements. So you understand guys what we mean by implied assertions. Say if there is no machinery, then it is, if there is no machinery, no building, it is a implied negative assertion. It is a implied negative assertion. The assertion is implied, but it is also negative because वो आ ही नहीं रही financial statements में. It is not being reflected in the financial statements. Okay. So is that clear to you guys? in sufficient detail I have tried to explain to you so that you do not forget. आपको स्टूडेंट्स कोई कंफ्यूजन नहीं होना चाहिए कि assertion का क्या मतलब है, और ये ध्यान रखना है आपने. You have always to remember that assertions are representation by management. Okay, these are only used by the auditor. Assertions are not made by the auditor, because the balance sheet is being prepared by the management. It is management's responsibility to prepare the financial statements. So assertions are also made by the management, as the auditor can see from the financial statements, and these are only used by the auditor to identify, to consider potential misstatements. Auditor proves or disproves assertions by obtaining audit evidence. Say if in the balance sheet of the company machinery is coming for rupees 10 lakh, okay, say if machinery is there for rupees 10 lakh, same example. So if the company doesn't show me this machinery, okay, then how I will be satisfied about the existence of this machinery? How I shall be satisfied about the existence of this machinery? Is that clear? Is that clear to you guys? Yes, students, is that clear? Yes, now Rekha Kumari is saying video is lagging. This can be issued today, Rekha, because of weather in many parts of the country today due to rainy season. So the connectivity might be a bit shaky today. So Madhushri is asking, sir, when there is no machinery, in the balance sheet, why it is a negative assertion? So the negative is only, Madhu, in respect of machinery. Say in respect of other things, it is a positive assertion. In respect of other things, it is a positive assertion. It is only in respect of machinery that it is a negative implied assertion when we consider it from the point of view of machinery. Okay, and when we say it is a service company, then it is a positive assertion from that point of view. Okay, so is that clear to you guys? Meaning of assertion, is that clear? Now we will consider, students, different type of assertions. We will consider different types of assertions. Different types of assertions. Yes, Hindvi is stating, if any assertion related to asset that represented in balance sheet exists, then it is a positive assertion. Yes, Hindvi, correct? Definitely it is correct. Definitely it is correct. So is the video now clear, students, or it is still lagging? Is the video clear or still lagging? Please let me know. No, Hiral is asking, is negative assertions are potential misstatement? No, Hiral, it is not a video is stuck. So 2 मिनट के लिए थोड़ा सा ब्रेक लगा दो. हेलो. Yes, students, welcome back. There is today problem of connectivity might be due to rains. So there are three types of assertion, guys. Have you joined in? There are three types of assertion. Yes, Kiran, you are saying it correctly. So there are three types of assertion. So one type of assertion relate to क्लासेस ऑफ ट्रांजैक्शंस, जो ट्रांजैक्शंस हुई हैं ड्यूरिंग द ईयर उसके बारे में, क्लासेस ऑफ ट्रांजैक्शंस एंड इवेंट्स. अनदर टाइप ऑफ assertion relates to account balances and another type of relates to presentation and disclosures. So guys, is this thing clear? There are three type of assertions relating to classes of transaction and events, to account balances and presentations and disclosures. So we will see what are these different type of assertions relating to all these three types. So first we will state assertions relating to what? Class of transactions and events. Students, क्या मतलब है इसका class of transaction and events? It means कि जो events, जो transactions उस पीरियड में हुए हैं जिनकी की फाइनेंशियल स्टेटमेंट्स हैं, ये assertions उनसे पर्टेन करती हैं. तो वो क्या क्या assertion हो सकती हैं? वो 5 टाइप की उसमें assertion हो सकती हैं. स्टूडेंट्स, यू हैव टू अंडरस्टैंड दैट देयर आर 5 टाइप ऑफ assertions. नंबर 1, first, these are, students, very common sense things. These are very common. No, Hiral, negative assertions do not denote any sort of misstatement. Negative assertions only denote that this thing is not existing. That's all. It doesn't mean that it has to be, there has to be some misstatement into it. Is that clear, Hiral? So assertions relating to class of transaction and event. Say number 1 is occurrence. Say guys, simple expenses is the simple thing is we can learn it from example. Say if in purchases of in the purchases head in the profit and loss of an organization, say purchases are of rupees 50 lakhs. So what does this mean? What is the assertion? The assertion is that the company has, the organization has in fact made purchases. So what is the assertion? That the purchases have been made by the company, that these transactions have occurred, in fact occurred. These are not merely book entries. Physically goods have been received in respect of those purchases. So when we say purchases have been made, so the management is making an assertion that occurrence of this transaction of purchases has actually happened, that actually goods have been purchased and these goods pertain to the company, that ownership of the goods pertain to the company. That is why it is being shown in the purchases account. So occurrence means जब हम कहते हैं कि ये चीज अकर हुई है, तो इसका मतलब है it has happened and it belongs to the company. So is that clear? Occurrence का क्या मतलब है? Yes, it means Jaspreet, stock of 50 lakhs of those goods. Yes, but here we are discussing types of assertions. So occurrence means that purchases have happened, and implied thing is that stocks have definitely come. Okay, and 50 and the purchases are in the name of the company, that the goods which have come, the company is the owner of those goods. Okay. So how the auditor would verify that assertion? It would be definitely verifying it from the purchase bills. Okay, from the records, from the stock records. So it is known as occurrence. That transaction has in fact happened. It is not a book entry. It is not merely a book entry. Transaction has happened. It is not a fake transaction. Actually purchases have been made, and these pertain to the company. So guys, you are clear about the meaning of occurrence. So now second assertion relating to class of transaction and events is completeness. So guys, first I will write name of all the 5 assertions and then we can discuss. Third is accuracy, fifth is cutoff, and fifth is classification. So these are different 5 types of, yes, Jaspreet, you are saying correctly. So these are different 5 type of assertions pertaining to class of transactions. Now we will understand meaning of all these 5 one by one. We have already discussed about occurrence. Occurrence, guys, is clear to you. Number 1, occurrence, that transaction has in fact occurred and it pertains to the entity. So this is the meaning of occurrence. Now what is second? Second is completeness. So what does completeness means? Say if there are sales of 50 lakhs are there in the profit and loss account, then completeness means that all the sales which should have been recorded in the books of accounts have been recorded. Which should have been recorded have been recorded. These are in fact recorded. So you understand what does it mean? Say it might so happen that some entry has been, some item has been reduced from stock, but its sale bill has not been raised. So in that case, sales are not complete. So the auditor would be verifying this completeness assertion of the management. When the management is saying my sales of 50 lakhs, the auditor would be checking, the auditor would be verifying that whether the sales are rupees 50 lakhs or these should have been more, whether all the sales have been included in the financial statements of the period which ought to have been included, or whether there is some missing revenue recognition, there is some missing sales. Okay, similar, you can take the example of purchases, that all purchases which ought to have been recorded have been recorded. Say some item has come, but it is there in the stock records, it has been updated, but the purchase bill has not been posted in the purchase account. Neither it has been posted in the purchase account nor it has been posted in the creditors account. So guys, is that clear? What do we mean by completeness? Yes, Jaspreet. It means that all the sales which should have been recorded are in fact recorded. So all the transactions which have been which should have been recorded, they are in fact recorded. That is we mean by completeness. That is we mean that it is complete. Is that clear? Yes. Next is fairly simple. Next is accuracy. Accuracy means that amounts and other data relating to transactions have been recorded accurately. इसका मीनिंग है कि जितने का बिल है उतना ही पोस्ट हुआ है. से इफ द सेल बिल one sale bill is of rupees 1 lakh and it has been wrongly posted for 10,000. Okay, then the auditor would be verifying this accuracy assertion by the management. The management is saying that say my total purchases are 50 lakhs. Okay, and all amount has been recorded correctly. So when the auditor is verifying the bills, one bill is found for rupees 1 lakh which has been posted for rupees 10,000. So the auditor is trying to prove or disprove the assertion of accuracy made by the management. Is that clear to you guys? So if the say accuracy assertion is proved, then it is also an evidence कि भाई सब कुछ ठीक है. If accuracy assertion is not proved, then it is also an evidence that auditor has verified the bill, but he has obtained one audit evidence that this purchase has been wrongly entered. So it is an example of misstatement. Okay, so you understand? You understand what is meant by accuracy? Yes, Sudhanshu Pandey. Completeness assertion. Now you have to see that how the companies are sold by the agent. He is sending advice. Then what is the procedure? What is the accounting policy being followed by the management in this respect? Now next assertion is cutoff. Next assertion is cutoff. Cutoff assertion, students, means cutoff assertion means that all transactions have been recorded in the correct accounting period. All transactions recorded in the correct accounting period. Say it may so happen that one bill is dated 31st March 2022. Okay, it was received in the factory also on 31st March 22. It should have been entered in the purchase account and stock records, but it was entered by the accountant in April 22. In month of April 22 on 2/4/22. So the auditor would see cutoff means what is the cutoff date for financial year 2022? 31st March 2022. So all the transaction which should be there from 1st April 21 to 31st March 22, these have been accounted in this correct accounting period. Okay, you understand what do we mean by cutoff? Is that clear to you guys? Cutoff. And now we come to next, fifth assertion relating to class of transaction. That assertion relates to classification. Fifth one is classification. Classification means that all the transactions have been recorded, have been classified properly and recorded in proper accounts. Recorded in proper accounts. Say an item which should be of revenue nature, it must go to profit and loss account. Like machinery repair should be there in the, it should be charged to revenue in the profit and loss account. And machinery items should be there in the balance sheet. It should be capitalized. So proper classification should be there. Pooja, what is your question? Please write elaborately. You are writing, it might be a misstatement also. What context you are talking about? Please drop your mail. So you have understood, guys, in respect to class of transactions, in respect to class of transactions or events. Transactions and events, there are, I am again repeating their names, there are 5 kinds of assertions. You have to remember their names and meaning, guys. Very important. 5 kinds of assertions. What are those kind of assertions? Number 1 is occurrence. Number 2 is completeness. Number 3 is what? Accuracy. Number 4 is cutoff. And number 5 is classification. Yes, you are referring to, Pooja, to accuracy of data. Yes, it can be deliberate, it can be error also, or it can be fraud also. So these are 5 assertions, students, 5 assertions. Again, I am telling you the meaning. Occurrence means the transaction has in fact occurred. Okay, and it belongs to the entity. Completeness means that all transactions which should have been recorded have been recorded. Which should have been recorded are recorded. And accuracy of data, these have been recorded in correct amount. Okay, cutoff means that these transactions and events have been recorded in correct accounting period. In correct accounting period. And classification means in correct accounts, that these have been, the entries have been made in correct accounts, in the financial statements, in proper accounts. So these are basically very simple things, students. Now when you look at them, these are very fairly simple things. भैया मैं परचेज कर रहा हूं तो ट्रांजैक्शन होनी चाहिए, इसमें कोई, देयर इज नो रॉकेट साइंस इन इट, बट यू हैव टू अंडरस्टैंड इट इन द लैंग्वेज ऑफ ऑडिटिंग. पॉइंट ये है कि आपको ऑडिटिंग की लैंग्वेज में, ऑडिटिंग की कंसेप्ट में इसको समझना और याद रखना है. Okay, students, is that clear? So you understand 5 kinds of assertion relating to class of transaction and events. Now we come to assertions relating to account balances. Assertions relating to account balances. Now there are four kind of assertions. There are four kind of assertions pertaining to account balances. Now what are those four kind of assertions, students? These four kind of assertions are: number one, existence. First I will write all the names and then we will discuss one by one. Second is rights and obligations. Third is completeness. And fourth is valuation and allocation. So clear, guys? First thing is existence, then there is rights and obligation, then completeness, then valuation and allocation. Now we will discuss one by one meaning of this. What is the meaning of existence? So assertions relating to account balances. So first one is existence. Now when we say account balances, we mean generally what is there in the balance sheet, in the asset side and liability side. Say secured loans, unsecured loan, fixed assets, sundry debtors, inventories. These are all account balances. Okay. These are the outcome of the various transactions which have happened during the year, which are reflected in the profit and loss account, and these are summarized in the form of financial position of the concern in the balance sheet. So first assertion is existence. So existence means that asset और liability दो ही चीजें हो सकती हैं भैया बैलेंस शीट में, या तो एसेट होगी या लाइबिलिटी होगी और इक्विटी होगी, कैपिटल होगा और इक्विटी इंटरेस्ट. ठीक है ना? तो फर्स्ट assertion is relating to existence. It means that the asset exists और liability exists. In fact है. Say जैसे we had taken an example of machinery or building. Say if there is in the balance sheet 1 crore. Okay. So I as an auditor physically inspect the building. So when I inspect the building and I see the building is there, then which assertion made by the management is proved? The assertion of existence. कि वो चीज exist करती है. The assertion of existence is proved. Okay. Similarly, you can take example of machinery. If the concern has purchased some new machinery, there is addition during the year, then auditor wants to inspect the machinery. Say if the machinery is found in the premises and found to be working and the concern has got a bill, then the existence of the machinery is proved. If the machinery is not present physically, then its existence is disproved. Okay. So in both cases, students, you have to understand that it is an evidence for the auditor that auditor applied the audit procedure of inspection. The auditor went to the plant and inspected the machinery. And if the machinery is found there, then assertion of existence made by the management in the financial statements is proved. If the machinery is not found there, it is not used for the purpose of business, it is non-existent, then the assertion of management regarding existence of machinery is disproved. It means in both cases, auditor has got audit evidence with him. He inspected the machinery and he made visit on a certain date. Machinery is there. So he has got the evidence. Yes, machinery was there. Existence is proved. If machinery was not there, then it means existence is disproved. The assertion of the management that machinery was there, which is implicit in the financial statement, from the financial statements, because the value of machinery is appearing in the balance sheet, then it goes on to disprove it. So in both cases, audit evidence is in hands of auditor. Is that clear? Now Himanshu is asking, if machinery is wrongly posted in furniture account, then which category of assertion is affected? Himanshu, the classification assertion is affected. That all the recorded amounts should be properly classified, and these should be recorded in proper accounts. These should be recorded in proper accounts in where these should go. Okay. The existence assertion is clear to you guys? Existence assertion is clear to you? Guys, I am taking a lot of time in explaining to you assertions because we feel that this topic is least understood by students. This topic is least understood by the students. They always have some hazy, some doubtful sort of picture regarding assertions in their minds, and till their finals they are not clear about what do you mean by assertions. So whenever something is coming in your modules regarding assertions, then they would be getting confused and they would be getting sorry figure. So existence, you understand? Now we come to second assertion relating to account balances, that is rights and obligations. So what does mean rights and obligation? Rights and obligation means agar kuch students, if something is coming under the head assets in the balance sheet, then what does it mean? It means that the company, the entity has right in it, because in assets there is always a right. अगर कंपनी की बुक्स में लैंड आ रही है तो इसका क्या मतलब है? The land belongs to the company and the company has a right to it. The company can use it however it wants. Okay. And what about liabilities in the balance sheet? Liabilities always carry obligation. Obligation means obligation towards others. Say if there is if under the secured loans, the balance sheet is showing secured loan of 1 crore, say from XYZ bank. So it definitely means that the company has an obligation to pay rupees 1 crore as per terms of agreement as on the balance sheet date. Okay, isn't it so? When there are some assets in the balance sheet, definitely the company has a right to enjoy those assets. The company has ownership related to those assets. Similarly, when there are obligations, when there are liabilities, the company has corresponding obligations to that. So how the auditor can prove that prove or disapprove this rights and obligations assertion. Say if the land is appearing in the balance sheet of a company under the head property, plant and equipment, then the auditor would ask to show what title deed of the land. कि आप मेरे को लैंड की रजिस्ट्री दिखाइए, टाइटल डीड ऑफ लैंड कि कंपनी लैंड की ऑनर है. बिकॉज इफ द कंपनी इज ऑनर देन ओनली इट विल बी एबल टू एंजॉय ऑल राइट्स एसोसिएटेड विद द ऑनरशिप. जो आदमी किसी चीज का मालिक है वही उसी चीज को यूज कर सकता है. फेयरली सिंपल. सिमिलरली ऑब्लिगेशंस, if in the balance sheet of a company like there is a secure loan, then auditor has to satisfied about it that company in fact has to pay. He would say, okay, show me your bank statement or give me the certificate from bankers that you had so much to pay to the bankers as on balance sheet date, that you had an obligation to pay rupees 1 crore to the bankers as on balance sheet date. So this is what we mean by rights and obligations. Okay, so this is what we mean by rights and obligations. You have to understand that assets always carry rights with them and liabilities always carry obligations with them. Is that clear to you, students? Now, Bindu Sai Lakshmi is asking, what if the machinery is not registered in the name of company? Bindu, I fail to understand your question. Why machinery is to be registered in the name of the company? What do you mean by registration of machinery? Land is registered. Purchase of land is required to be registered with the registering authority. Machinery is a capital expenditure. It is a simple purchase transaction from the supplier. The company has bought some machinery, has bought some assets. That is evidenced by the purchase bill of machinery. There is nothing, no such thing as registration of machinery. Is that clear to you, Bindu? So you understand, guys, rights and obligations. Now we come to third point, that is completeness. Same thing as we have learned. This is the same assertion as of transactions and events. Completeness. Completeness means that all assets and liabilities, which should have been recorded, have been so recorded. Clear, guys? It means that no asset is left to be recorded. No liability is left to be recorded. It might so happen that there might be certain hidden liabilities which are not there reflected in the balance sheet. So all the assets which should have been recorded, yes, Himanshu, yes, you can ask for hire purchase agreement and not sale deed. In case of machinery, it is a simple sale transaction. There is no sort of deed. There can be an agreement, but there can be no sort of deed type of word is not used normally in case of machinery. Deed types of words are normally used for purchase of land. Himanshu, take care. So assets and liabilities which should have been recorded have in fact been so recorded that no assets have been left out to be recorded and no liabilities have been left out to be recorded. Okay, clear students? So now we come to fourth point. Fourth point of assertions relating to account balances. Now what is the fourth point? Fourth point is valuation and allocation. Valuation means that all the assets have been valued. All the assets and liabilities both. Because account balances would be pertaining to assets and liabilities. These have been valued at appropriate amounts. These have been valued properly. Say in case of inventories, in case of closing stock, this has been valued properly according to recognized methods of valuation. Say raw material has been valued at cost, work in process has been valued at cost plus other manufacturing expenses, and all the manufacturing expenses which have been incurred up to the stage of production have been allocated properly. And say finished goods have also been valued at cost. So valuation means that all the assets and liabilities have been valued at appropriate amounts. Okay, so is that clear? So guys, again I am repeating it. All the four assertions relating to account balancing. Four assertions relating to account balances. Okay. What are those assertions? Again, we will repeat. Number one is existence. Existence, you have already understood that asset or liability exists. Number two is, what is number two? Rights and obligations. That assets enjoy rights and liabilities carry obligation. Now auditor has to prove or disprove. How he will see? He will see it from the documentary evidence. He might see it from the documentary evidence as we have discussed. Number three is completeness. That all the assets and liabilities which should have been recorded are in fact recorded. That no item is left out. All assets and liabilities which should have been recorded are in fact recorded. And number fourth is valuation and allocation. Valuation and allocation we have done recently just now. That all the assets and liabilities have been valued at appropriate amounts. We have just considered the example of valuation of inventories. Now Hiral is asking, is equity and interest also come under valuation? Yes. Hiral, all the items of assets and liabilities, including equity, interest, including capital, these have to be recorded at appropriate amounts. You understand that while capital is reflected, certain adjustments might have to be made as per say in the case of balance sheet of a company, and or in the case of another organization, say in case of partnership concern, partner remuneration may have to be provided, or interest on partners capital may have to be provided. So these whether these and these would be being credited in the capital account of that organization. Okay, so these are the four kind of assertions which relate to account balances. Now we come to last set of assertions. These assertions relate to presentation and disclosures. These are also four assertions. Four assertions relating to presentation and disclosure. Guys, you are able to hear me properly? Is the video audio clear? Four assertions relating to presentation. Now, what are these assertions? These are occurrence and rights and obligations. Okay. Number 2 is completeness. Number 3 is classification and understandability. And number 4 is accuracy and valuation. So, look, the company, the organization has made certain disclosures in financial statements. Now, the assertion is that the disclosures which the company is making, whether these have occurred, whether these disclosures have in fact occurred, it is the same assertion as it was there in the case of class of transactions. And whether these disclosures carry rights and obligations, same thing. Like in case of assets, if there is a disclosure pertaining to assets, then it will be carrying a right. And if there is a disclosure pertaining to liabilities, then it will be carrying an obligation. So simple. Next is completeness. Completeness again means that all the disclosures which should have been disclosed have been disclosed. Okay, so all the disclosures that should have been included in the financial statements, these have been so included, these have been so disclosed. Okay, so number 3 is classification and understandability. It means that disclosures are given in the financial statements in clear terms. There is no confusion. There is no confusion, and these are properly classified and given in such a manner so that these are easily understandable. Okay, and accuracy and valuation, again it is a combination of the assertions which we have learnt in relating to transactions and also relating to account balances. Accuracy means the disclosures have been recorded in appropriate amounts, in correct amounts, and if some valuation is made, then valuation has also been made at appropriate amounts correctly. Is that fine, guys? So, to summarize, what you have learned today about assertion is that assertions are of 3 kinds. Assertions are of 3 kinds. These relate to what? These relate to transactions and class of events, class of transactions and events. These relate to account balances, and these relate to presentation and disclosure. Okay, So we have done 5 assertions relating to class of transaction, 4 relating to account balances, and 4 relating to presentation and disclosure. So what again I am summarizing, 5 relating to class of transactions are occurrence, completeness, accuracy, cutoff, and 5th one is classification. And relating to account balances, these are, what are these? Existence, and second is rights and obligation, third is completeness, and fourth is valuation and allocation. Okay, and regarding presentation, we have just learned occurrence and rights, obligations. So you can learn it from occurrence is here and rights and obligation is here. So it is a combination of this and this, occurrence and rights and obligations. So first assertion in presentation and disclosure is combination of these two things. Second, completeness. Now it is common everywhere. So I am giving you tips regarding learning also. Third is classification and understandability. So classification was here also, classification and understandability. And fourth is accuracy and valuation. So guys, I think you have got a fairly broad idea about assertions. There is probably no confusion, and you have broadly you have understood what do we mean by assertions and what are the different type of assertions. Now Hindavi is asking, if there is obligation regarding to liability, then it should be disclosed in account balance, assertion and presentation. Say Hindavi, when you show liability, when something is disclosed as a liability in the balance sheet, in the financial statement, then it carries an obligation. It is implied. Say if there are sundry creditors on 1 crore in the balance sheet, then it is implied that the company has to pay that amount to these creditors. So obligation is implied within the liabilities, because liabilities carry an element of obligation with them. अगर मेरे पास पे करने की obligation नहीं है, तो liability कहां से हुई? How it is a liability? If I do not have to pay, then how it becomes a liability for me? Similarly, if I do not enjoy the right to use of an asset, then how it is an asset for me? Is that clear? So liabilities always carry obligation with them. There is no need to separately disclose that this amount has to be paid. It is there, but the auditor uses this assertion of obligation to check potential misstatement. Say if the balance in some account of creditor is coming for say 3 years, same balance is coming. Every year opening balance 10 lakh is coming, there is no transaction in the account. So what the inference the auditor is going to draw? The auditor would say that they have got no obligation to pay. 3 साल हो गए भैया, अब या तो आप बताइए कि क्या आपने पैसा देना है या नहीं देना. So you understand, it is an liabilities always carry an obligation to pay element with them. Okay, So if some payable amount is coming in the balance sheet, so the auditor would try to prove or disprove कि क्या वो अगले पीरियड में पे हो गई या नहीं पे हुई, whether it has been paid or if it is long outstanding, then it means that you need the company in fact didn't have any liability to pay. 4-5 साल से अगर कोई आइटम खड़ी है, then it means it didn't have liability to pay, it might have to be written off. So is that clear to you, Hindavi? Yes, guys. So assertion topic is clear to you. Please let me know, guys. So, guys, here we'll be taking a short break of 5 minutes. And because we had lost 10 minutes earlier also due to some technical snag. So we'll be taking a short break of 5 minutes. Do join after 5 minutes, guys. Yes, students. Now we would be coming to audit evidence. We will study meaning of audit evidence and what does SA 500, Standards on Auditing 500, says about audit evidence. So everything in relating to audit evidence in this chapter is majorly from SA 500. It is in reference to SA 500. So you have to remember the name of this essay, SA 500 pertaining to audit evidence. Now Prabhas is asking, can we have MCQs on assertions? Yes, Prabhas, we will definitely have when the time comes, either today or in next session. And Hindvi is asking if there is any risk of material misstatement, then only assertion should be disclosed. No, Hindvi, you are again thinking wrongly. Assertions have not to be disclosed. These are in fact a way of understanding, that management is saying something and those things have to be proved or disproved by the auditor, by proving that assertion or by disproving that assertion. How the auditor would prove or disprove that assertion? By obtaining audit evidence. Is that clear to you, Hindavi? So these are all being taught to you to provide a framework reference to understand this concept of what is expressly stated in financial statements, what inferences can be drawn from financial statements, and how these are to be proved or disproved by the auditor by obtaining audit evidence. So what is the meaning of audit evidence? So as per SA 500, first of all, guys, SA 500 discusses what is audit evidence, what constitutes audit evidence. It throws light on what constitutes audit evidence, and it also tells us, it also dwells upon the responsibilities of auditor with regard to design and performance of audit procedure. परफॉर्मेंस ऑफ ऑडिट प्रोसीजर्स, कि भाई उसको कैसे ऑडिट प्रोसीजर्स डिजाइन करने हैं ऑडिटर को अपने, टू ऑब्टेन ऑडिट एविडेंस, उसके बारे में क्या क्या ऑडिटर की रिस्पॉन्सिबिलिटीज हैं, ये सब SA 500 में दिया गया है. और वॉट एवर स्टूडेंट्स यू वुड बी स्टडिंग इन दिस चैप्टर पर्टेनिंग रिलेटिंग टू ऑडिट एविडेंस is majorly drawn from what is stated in SA 500. Okay, so it is a very, very important standard on auditing, students, SA 500. So all things that we will be learning about audit evidence today, you can presume that it is in reference to SA 500. So students, you have before we proceed further, you have also to understand that audit evidence is not some, again I would be using the word, is not some sort of rocket science. These are again very common sense type of evidences which you know, but in the auditing language, these are called as audit evidence. Say, when we verify some, say, purchase transaction, then we verify the bill. Okay, so the bill is also an audit evidence. The when we examine some agreement, then that agreement is also, and the copy of agreement is also an audit evidence. Okay. So similarly, when we rely upon internal controls, so the internal control literature, the internal control manual of that organization, that company also becomes an audit evidence. So these are things which you know already, but you have to understand these things in a technical language, in a slightly technical language, in the language of auditing. Okay, so is that clear? Audit evidence it is कोई डरने वाली चीज नहीं है. It is nothing to be feared about. Okay, nothing to be feared about, nothing mysterious about it कि कोई एविडेंस कोई बाहर से हमें कुछ कलेक्ट करना है, ऐसा नहीं है. ओके. So what is the meaning of audit evidence? So students, as per SA 500, information used by auditor. Information used by auditor in arriving conclusions. Information used by auditor in what? In arriving what? Conclusions. Conclusions regarding what? In arriving conclusions on which auditor's opinion, on which his opinion is based. On which his opinion is based is known as audit evidence. So clear hai? It has got three components, guys. The definition of audit evidence has three components. It is information which is used by auditor. That is very important. Say when you try to analyze it, when you compare it with assertions, so assertion was representation made by management and used by auditor. Similarly, audit evidence, it has nothing to do with management. It is used by the auditor, information used by the auditor in arriving conclusions on which auditor's opinion is based. So fairly simple. जो भी ऑडिटर ऑडिट प्रोसीजर्स अप्लाई करके उसको कंक्लूजन्स पे अराइव करता है और उन कंक्लूजन्स पे उसका ओपिनियन बनेगा, जब वो ऑडिट एविडेंस ऑब्टेन करेगा, ओनली देन ही विल बी एबल टू नो कि भाई मेरे को इसमें क्वालिफाइड ओपिनियन देना है या अनक्वालिफाइड ओपिनियन देना है, वेदर ही कैन स्टेट दैट फाइनेंशियल स्टेटमेंट्स रिफ्लेक्ट ट्रू एंड फेयर व्यू और नॉट, और वेदर the audit evidence does not corroborate his notion of true and fair state of affairs of the company. So you understand what is the meaning of audit evidence? Audit evidence is information used by auditor in arriving conclusions on which audit opinion is based, on which opinion of auditor is based. So audit evidence कहां से collect करेंगे? From where the auditor shall obtain audit evidence? Now second question arises. From where? You will say आपने कह तो दिया audit evidence, but from where audit evidence will be obtained? Okay, so audit evidence includes both the information contained in accounting records and underlying financial statements, and other information. It may not be drawn from accounting records. So these are the key points. So audit evidence includes information contained in accounting records underlying the financial statements. जिन अकाउंटिंग रिकॉर्ड से फाइनेंशियल स्टेटमेंट्स बनी हैं, the information, the raw data, the source data like purchase bill, sale bill, stock records, inventory movement records, debit notes, credit notes, these are all information in accounting records from which financial statements have been made. So the audit evidence is drawn from these. Okay, this is one source of audit evidence. Another source is other information, which is not drawn from accounting records. Now, what could be the example of that other information? Say, in case of a company, minutes of meeting. उस मीटिंग में क्या हुआ, क्या नहीं हुआ. Okay, that is an from which the auditor might obtain some information. This is example of other information. Say another information could be, say the auditor sends for confirmation from debtors. There are debtors of say 10 lakhs. So the auditor independently verifies that debtor by sending an external confirmation. डेटर बाय सेंडिंग एन एक्सटर्नल कंफर्मेशन. वो डेटर्स को, वो उस डेटर को लिख रहा है कि भैया आप कंफर्म करिए कि आपका बैलेंस इस कंपनी में 10 लाख रुपए है कि नहीं. तो दिस वी विल बी लर्निंग इन ग्रेट डिटेल विद इन दिस चैप्टर. Okay, so what is the procedure of sending external confirmation? What are the modalities about it? This we will be learning. So, but this information, this confirmation, say the debtor also sends the confirmation, yes, balance is 10 lakhs. Okay, but this document, this external confirmation has not come from the accounting records of the company. The auditor is using the information drawn from the accounting records, but he is verifying it from an independent source. So the external confirmation which he has received, that in fact, say the balance of that debtor is in fact rupees 10 lakhs, then this confirmation is an example of other information, because the auditor has not drawn this evidence from the internal records, from the accounting records of the company. Okay. So you are clear about? Yes, Sudhanshu, I have already discussed what do we mean by other information. Other information not only means information from third parties, but it also means information given by the organization which is not in accounting records, which is from other sources, like say minutes of the meeting. Minutes of meeting is also other information, but the record pertains to the company. But since this information is not drawn from the accounting records, therefore we are saying that it falls within the other information. And other information also means information received from third parties, as you are saying. So is that clear कि ऑडिट एविडेंस या तो एंटिटी के अकाउंटिंग रिकॉर्ड से आएगा या अदर इंफॉर्मेशन से आएगा. आइदर इट हैज टू कम फ्रॉम द अकाउंटिंग रिकॉर्ड्स or from other information. So the other information might belong to the sources other than accounting records within the company, or it might be information received from the third parties, as Sudhanshu you are saying. So is that clear, students? What constitutes audit evidence? So this point, what constitutes audit evidence? Is clear to you guys? So there are only 2 points: information from accounting records on the basis of which financial statements have been prepared, and second is other information. So what was the audit evidence? Audit evidence, go to the definition. Audit evidence is the information. Audit evidence is the information used by the auditor. It is the information used by the auditor to arrive at conclusions on which his opinion is based. It is information. So these are both informations. So the audit evidence is information used by an auditor to arrive at conclusions. On the basis of information, he makes some conclusions that this is appropriate or this is inappropriate. And after making that conclusion that this is appropriate or this is inappropriate, he makes his opinion. He makes his opinion on the financial statements. Okay, guys, so is that clear? Now, as per SA 500, as per SA 500 students, you have to learn that the objective of auditor students, is the video clear or is it stuck up? One of you is stating, Jaspreet is stating that video is sticking. Is it clear now, guys? There might be some problem today due to connectivity issues, due to bad weather, students. Now the technical person is telling me that audio video is clear. There might be problem at your end, Jaspreet, due to rainy weather in many parts of the country. So the objective of auditor, as per SA 500, it is to design. What is objective? To design and perform what? Audit procedures. So we will learn about audit procedures later on. But broadly, you understand what are audit procedures. The ways by which the auditor obtains evidence are audit procedures. So the objective of auditor is design and perform. Both things are important. Design and perform. He has to design also and perform. Design means he will see what procedure have to be performed, and actual performance. Both things are important. So the objective of auditor is to design and perform audit procedures in such a way so as to obtain what? Now these two terms which I am going to state, students, these are keywords. These would be being repeated in your module n number of times. So you have to learn these two words and remember immediately right now. So design, the auditor has a responsibility as per SA 500 to design and perform audit procedures in such a way. How? In such a way to obtain what? To obtain sufficient and appropriate. Sufficient and appropriate audit evidence. Now, what is sufficient? What is appropriate? This we are going to discuss right now. but you have to learn these two terms. These are two keywords, that audit evidence has to be sufficient and appropriate. Okay, students. So as per SA 500, the auditor has to design and perform audit procedures in such a way to obtain sufficient appropriate audit evidence. To obtain sufficient appropriate audit evidence. Now these are two key terms and these have to be remembered as such. Sufficient and appropriate. Now what is sufficient and what is appropriate? This we will be discussing right now. Okay, because guys, you have to understand, if the auditor is not able to draw sufficient appropriate audit evidence, then he will not be in a position to draw appropriate conclusions on which he has to base his opinion. Therefore, it is necessary that he should obtain sufficient appropriate audit evidence on the basis of which he can draw conclusions for making his opinion. It is necessary for him to obtain sufficient appropriate evidence to enable him to draw conclusions for the purpose of making his opinion. Okay, is that clear? Very important, these two terms. Rather, these two words. This is a one term, sufficient appropriate. Sufficient appropriate, this is a one word, one term, but it has two words, sufficient and appropriate. It has got two words, sufficient and appropriate. Okay, so what is the meaning of sufficient audit opinion and what is the meaning of appropriate audit opinion? Now we will come to this. Now, as per SA 500, what does sufficiency of audit evidence mean? क्या मतलब है इस वर्ड का sufficient? It relates to quantity of audit evidence. Sufficiency relates to quantity of audit evidence. So you can understand, it means कि आपने जितना चेकिंग करनी थी, जितना सैंपल ड्रॉ करना था, वो कर लिया. से you intended to do 30% of checking. So whether you have done that 30% of checking, if you had earlier planned that you intend to do 30% of checking, so whether you have done that 30% of quantity, okay, so it relates to quantity of audit evidence. Sufficient, as you mean, sufficient is related to quantity, whether it was sufficient or insufficient. So clear? What is the meaning of sufficiency of audit evidence? Now we will see what is the meaning of appropriateness of audit evidence. Now SA 500, in accordance with SA 500, what does appropriateness of audit evidence means? What is the meaning of appropriateness of audit evidence? Now, appropriate relates to quality of audit evidence. कि जो आपने ऑडिट एविडेंस यू हैव ऑब्टेन्ड वेदर इट इज ऑफ गुड क्वालिटी और लो क्वालिटी. से स्टूडेंट्स, we take example of debtors. We take example of debtors. Say we have checked sales and corresponding bills have been traced to one debtor. Bills to one debtor. Okay. The auditor has also verified bank statement and tracing those, and has traced payments which have been received from that debtor to the bank statement. Okay, all these things have been done, and the balance of debtor is coming to be 7 lakhs. Now this all type of evidence which the auditor is collecting, this is internal evidence. Okay, this is being generated from the information within the company, within the entity. So say the auditor also sends external confirmation to the debtor. He has sent a request for external confirmation to the debtor, and he sends a request कि आप confirm कीजिए कि आपका balance इतना है, and the said debtor also replies and confirms the balance. Now this type of evidence which he has obtained from a source which is outside the entity, it is more reliable. It is of high quality. It is of high quality as compared to evidence generated within the company. It doesn't mean that this evidence is not to be relied upon. It is not like that this cannot be relied upon. The auditor usually makes a combination of evidence collected from internal sources and external sources. But obviously this evidence is of high quality. Okay, so you understand what do we mean by quality, and what is the meaning of appropriate audit evidence, sufficient and appropriate audit evidence. So sufficiency, again guys, sufficiency is a measure of quantity. Sufficiency is a measure of quantity. It is a measure of quantity of audit evidence. And appropriateness is what? It is a measure of quality of audit evidence. So clear guys? Sufficiency and appropriateness, these two terms would be getting repeated in this chapter and in other chapters many times. So you should be clear what do you mean by sufficiency, what is appropriateness. Many times 2-mark question has also come relating to the meaning of sufficiency and appropriateness. And guys, now one more thing. We have understood what is the meaning of sufficiency and what is the meaning of appropriateness. So can there be a relationship between the two? Can there be a relationship between sufficiency and appropriateness? Is there a relationship between two? Whether one thing is affected by another or both affect each other? Can there be a relationship between sufficiency and appropriateness, guys? Yes. Say, students, if the audit evidence is of higher quality, if the audit evidence is of higher quality, अगर वो उसकी क्वालिटी अच्छी है, इंडिपेंडेंट सोर्सेज से लिया गया है या इंटरनली ऑर्गेनाइजेशन से लिया गया, तो भी it is very reliable. The auditor thinks in his professional judgment that it is reliable. If the audit evidence is of higher quality, then less of audit evidence, less of quantity would be needed. Less of quantity would be needed because the auditor is getting assurance, the auditor is getting confirmation from high quality audit evidence. So both affect each other. The more qualitative audit evidence is, the less of quantity is required. Okay. Is that clear? And guys, you have also to understand, if the auditor assesses higher risk of material misstatement, okay, if there is high risk of, the auditor thinks that there are many areas of potential fraud in the company, in the organization, then more evidence would be required. Then sufficiency would be increased. Quantity of evidence may increase. Okay. So guys, you have one more thing you have to understand, that quantity of audit evidence. Quantity of audit evidence may not compensate. It may not compensate for its quality. आप you are checking, say, debtors, and you are verifying debtors, and you try to check 70% of debtors. So you have verified 70% of debtors, you have increased the quantity. You have increased the quantity. Auditor has increased the quantity. But it doesn't mean that audit evidence, by increasing quantity, he has obtained sufficient appropriate audit evidence, because the increase in quantity does not mean that the audit evidence is qualitative. It might be कि आपने 25% डेटर से ही से आपने एक्सटर्नल कंफर्मेशन ली, and you are pretty much comfortable that all confirmations are reconciled, are tallied with the financial statements. However, अगर आपने सारे 75% या 80% भी डेटा चेक कर लिए, लेकिन उसकी क्वालिटी को कंपनसेट वो क्वांटिटी नहीं कर पाएगी. इट इज क्वाइट पॉसिबल कि क्वांटिटी बढ़ाने से क्वालिटी इंप्रूव ना हो. ओके, इज दैट क्लियर? Is that clear to you, students? What is meant by sufficiency or sufficiency and appropriateness, and what do we mean by sufficient appropriate audit evidence? Again, I am writing this term, these two words, very important, guys. Sufficient appropriate audit evidence. You have to remember this. Sufficient appropriate audit evidence. So clear, students? Now we come to certain factors which might affect the sufficiency of audit evidence. Factors affecting sufficiency of audit evidence. So Shakti Velan is saying, sir, what if the firm had bribed the external source? So Shakti, do not make two hypothetical assumptions. ऐसे तो कुछ भी हो सकता है, but again you go to basics. What was the auditor's objective as we had learnt in first chapter? It was to obtain a reasonable assurance. It is not a guarantee. Again, you have to remember, then that an auditor gives his opinion, he does not give 100% guarantee that financial statements are free from material misstatements. He only expresses his opinion, but this opinion is also of a high quality. He has obtained reasonable assurance, and reasonable assurance is also a high level of assurance. He has performed all the procedures, he has done his job in a professional way as is required by the standards on auditing. You would do well to remember that auditor is not an investigator. Audit is distinct from investigation. There can be misstatements even in audited accounts, but the auditor would have to show that he has done his work professionally in accordance with standards on auditing. Okay. So in your hypothetical example also we can say, then auditor will say that I have performed the procedures, I have sought information from external parties. Now if these external parties have been manipulated, that what he can do? Okay. So he has to show that he has done his work, he has applied the audit procedures in accordance with standards on auditing. So factors affecting sufficiency of audit evidence. So what are the factors, students, which affect sufficiency of audit evidence? किन फैक्टर से ऑडिट एविडेंस की सफिशिएंसी अफेक्ट हो सकती है? तो तीन फैक्टर, देयर आर थ्री फैक्टर स्टूडेंट्स. वन इज मेटीरियलिटी, second is risk of material misstatement, and third is size and characteristics of population. Now we will consider all these factors one by one. We are studying, students, which factors affect sufficiency of audit evidence. That audit evidence can be affected by which of the factors? Hope, Shakti, you have got the answer. Please drop your mail. Hope you have got the answer to your query. Now materiality. How does materiality affect audit evidence? Say if the assertions for which the auditor is obtaining audit evidence are lesser important to users of financial statements, then less audit evidence would be required. However, if those assertions which are more important to users of financial statements For them, more evidence would be required. It means for say for the items which are affecting profit of the company, the auditor would be obtaining these are of great importance to users of financial statements. So the auditor would be obtaining more evidence in respect of assertions relating to the profits of the company. Okay, which prove or disprove profits of the company. Similarly, more evidence uh, would be required for assertions which are important to the users, and lesser lesser quantity may be required for say items of small value which are not so important to users. Okay, is that clear how materiality affects sufficiency? Now second point is risk of material misstatement. Now how does risk of material misstatement affect sufficiency? Say if the auditor thinks that there is a high risk of material misstatement, there is a high risk, there are many areas in which fraud can be there, or there are many fraud prone areas or error prone areas where there is likelihood of misstatements, then more audit evidence would be needed. And if the auditor thinks that risk of material misstatement is low, then less audit evidence would be needed. So this is how the risk of material misstatements affects sufficiency. So this is how risk of material misstatements affects sufficiency of audit evidence. Students, you would understand this risk of material misstatement concept in greater detail when you will come to chapter 4. Okay, so for the time being you can understand that risk of material misstatement means that risk that financial statements are misstated prior to audit, that before an audit has been conducted, there is a chance, there is a greater risk that there are errors or frauds in the financial statements. Okay, that financial statements are misstated prior to audit. This you would be you would be learning in great detail during chapter 4. So many things would be clear to you there also. As students, I had told you at the very beginning, at the start of chapter 1, at the very outset, that as the course progresses, as you would hop from one chapter to another, things would become clearer to you. Things would become clearer to you. Okay, clouds of doubts would disappear themselves. Because when you would be hopping from one chapter to another, you would be making linkages, and some terms which are coming in starting chapters, these would be coming in subsequent chapters in greater detail. So you would be able to draw your own conclusions and things would be clearer to you. Okay, and third point is what was the third point? Third point was size and characteristics of population. Now what does this mean? Size and characteristics. Say we will try to study it from by taking an example. Say if a company deals in one kind of product, okay, and compare it with a company which deals in say 25 number of products. Then it would be easy for an auditor to obtain audit evidence in this kind of homogeneous population where all the data is same. Only there is one product, price might also be same, only quantity and buyers are different. Whereas in case of a heterogeneous population, okay, more audit evidence would be required because due to the different type of uh, transactions, due to heterogeneous nature of population here we mean to say, say students, you I told you that auditor performs sampling procedures. He draws samples. He does not undertake 100% checking. He draws samples and on the basis of which conclusions are made. So we say sample is drawn from a homogeneous population or a heterogeneous population. When it is drawn from a homogeneous population, एक जैसी, or heterogeneous population, different. So in case of heterogeneous population, more audit evidence would be required. In case of homogeneous population, less audit evidence would be required, less number would be required. Similarly, in case of smaller population, audit evidence, small quantity would be needed. In case of larger population, obviously, in relation to that population, larger quantity would be needed. It is as simple and as based upon common sense as other thing. Now Pooja is asking, can company manipulate audited and signed financial statements? How, Pooja, how it is possible? When the auditor has signed a balance sheet, he has given an opinion, then it is an official document. If you want to change, then it means you are fabricating. You are fabricating the document. It would be an offense under Indian penal code. Okay, is that clear? So you understand, students, three type of factors which affect the size, which affect the sufficiency of audit evidence. So what are these three factors? These three factors are: number one, materiality; number two, what was number two? Number two was risk of material misstatement, and number three is size and characteristics of population. Is that clear? So, and when we talk about appropriateness of audit evidence, students, you have to remember that when the auditor obtains appropriate audit evidence, he would always try to make his audit risk low. Risk that he expresses an inappropriate opinion, he would always try to keep his audit risk low. Therefore, he will rely upon qualitative evidence. जिसकी quality अच्छी है, he will rely upon qualitative evidence, because by relying upon qualitative evidence, he is gaining comfort, he is obtaining reasonable assurance that there is lesser chance of his expressing an inappropriate opinion. That there is a lesser chance of his expressing an inappropriate opinion. So is that clear to you guys? Is that clear to you guys? Sufficiency and appropriateness of audit evidence. So guys, are you in a mood to do some correct, incorrect type of questions? 3, 4. Yes, guys. Please drop your mails. Yes. Guys, are you finding the session useful? Please give your feedback. क्या मैं आपको वो समझा पा रहा हूं जो आपको समझना चाहिए? So guys, we will be reading this chapter from module also, but due to very nature of this chapter, I have considered it proper to explain you the things in detail on board. Okay, we will be definitely reading from your module also later on during the during subsequent coming sessions. So are you still joined in? So let us do first question number 2. So let us do question number 2, guys. Obtaining audit evidence of high quality may lead to reduction in quantity of audit evidence. Is the statement correct or incorrect? Question number 2. First question number 2. Obtaining audit evidence of high quality may lead to reduction in quantity of audit evidence. कि अगर ऑडिट एविडेंस हाई क्वालिटी का है तो उससे हो सकता है क्वांटिटी ऑडिट एविडेंस की कम जरूरत पड़े. We have done it recently. Yes, guys, no mails. I am asking about question 2. I am not taking question 1, guys. First question 2. Obtaining audit evidence of high quality may lead to reduction in quantity of audit evidence. Yes, only 3, 4 mails. Obtaining audit evidence of high quality may lead to reduction in quantity of audit evidence. Yes, this statement is correct because when you obtain high quality audit evidence, it may lead to reduction in quantity of audit evidence. The quantity might get reduced because you are obtaining you are comfortable with qualitative evidence you have collected. Okay है या नहीं? You have to say. Size पे depend करता है या नहीं? Whether this statement is correct or incorrect. Yes, question number 3. Sufficiency of audit evidence is affected by size of population. Tell me whether this statement is correct or incorrect, students. Question number 3. Yes, guys, you are able to see the video or is it stuck? Video is working properly at our end, students. There might be Akash Neil problem at your end. Sufficiency of audit evidence is affected by size of the population. Is the statement correct or incorrect? Sufficiency of audit evidence is affected by size of population. Yes, tell me guys, what is the answer to this question? Is this statement correct or incorrect? Yes, many of you have answered it correctly. This statement is correct. Sufficiency is definitely affected by the size of the population. So if the population is large, then more audit evidence is required, greater quantity. If the population is small, then lesser audit evidence would be required. Now Pooja is confusing it with heterogeneous and homogeneous. But Pooja, the statement does not ask about heterogeneous or homogeneous population. It is asking you to just comment upon whether sufficiency of audit evidence is affected by size of population or not. So you have to think, if the size of population is more, then obviously quantity of audit evidence would be more. If the size of population is small, then quantity of audit evidence would be less. So isn't it so? Why you are relating it with homogeneous population and heterogeneous population? So are both the questions clear to you guys? So guys, today you have learnt about mainly about assertions and audit evidence. We have started the topic of audit evidence, and you have also learned what do we mean by sufficient appropriate audit evidence. What constitutes an audit evidence as per SA 500. So we will be learning more about audit evidence and other so many things. It is a very interesting topic, guys, students. So do not miss it. And I hope that you must have enjoyed this lecture. If there are any issues, you can send your feedback. You can drop your mails. Okay. So for the time being, it's good night from my side. Okay. Okay, guys. Good night. Good night to everybody of you. Okay. Thank you. Yes.